Hello, neighbors, and welcome back to the neighborhood. I am Squealer D, and I am back again. And this time, friends, we are in the money world. That's right, learning about fixed income types. And I don't mean fixed income that you are on like Social Security or retirement. I mean types of fixed income to invest, my friends. Today is day 40 of learning. Yay us. We have been doing this for 40 days now. If today is your first day, you can jump into our playlist called Stock Market Learning on my YouTube, and you can learn. I start at what is the stock market, and we are going through until we understand everything there is to invest, my friends. So let us get started, and then as usual, we will check out the news and some of our paper investments we have going. So this is called Guide to Fixed Income Types and How to Invest, and it is written by James Chen. And he is an expert trader, an investment advisor, and a global market strategist. It's reviewed by Michael Boyle and fact-checked by Patrice Williams. So I got my coffee today, guys. No D cup. It's Sherry's today. I made a cappuccino. Second cappuccino I made. This one's even better than yesterday's, guys. I'll tell you what. We got that little espresso machine, and you make an espresso shot, and you put some milk in it, and it's like magic. It makes you like coffee even more than you already liked coffee. Crazy. So simple. So, what is fixed income? Fixed income broadly refers to those types of investment security that pay investors fixed interest or dividend payments until their maturity date. At maturity, investors are repaid the principal amount that they had invested, like a bond, guys, their face value. Government and corporate bonds are the most common types of fixed income products. Unlike equities that may pay out and guys, we did one on bonds. So if you are unsure of what bonds are, you could check out our bonds video in the playlist. That's right. We got a whole playlist. We got 40 videos now, guys. Some of them we had to do 2. So we might have 43 videos in there. Exciting times. Imagine we have 500 videos in there. I might be a pro. So, unlike equities that may pay out no cash flows to investors or variable income securities where payments can change based on some underlying measure, such as short-term interest rates, the payments of a fixed income security are known in advance and remain fixed throughout. In addition to purchasing fixed income securities directly, there are several fixed income exchange-traded funds and mutual funds available to investors. Fixed income is a class of assets and securities that pay out a set level of cash flows to investors, typically in the form of fixed interest or dividends. Government and corporate bonds are the most common types of fixed income products. They are known as fixed income products because they pay a fixed interest rate credited to investors. At maturity, for many fixed income securities, investors are repaid the principal amount they had invested in addition to the interest they had received. In the event of a company's bankruptcy, fixed income investors are often paid before common stockholders. So, you could come check out this cool little video on your own. Understanding fixed income. A fixed income is a type of investment security that pays the investor a fixed amount on a fixed schedule. Companies and governments issue debt securities to raise money to fund day-to-day operations and finance large projects. For investors, fixed income instruments pay a set interest rate in exchange for investors lending their money. At the maturity date, investors are repaid the original amount they had invested, known as the principal. For example, a company might issue a 5% bond with a $1,000 face or par value that matures in 5 years. That the investor buys the bond for $1,000 and will not be paid back until the end of the 5 years. Over the course of the 5 years, the company pays interest payments called coupon payments based on a rate of 5% per year. As a result, the investors paid $50 per year for 5 years. At the end of the 5 years, the investor is repaid the $1,000 invested initially on the maturity date. Investors may also find fixed income investments that pay coupon payments monthly, quarterly, or semi-annually. Fixed income securities are recommended for conservative investors seeking a diversified portfolio. The percentage of the portfolio dedicated to fixed income depends on the investor's investment style. There's also an opportunity to diversify the portfolio with a mix of fixed income products and stocks, creating a portfolio that might have 50% in fixed income products and 50% in stocks. Treasury bonds and bills, municipal bonds, corporate bonds, and certificates of deposit, CDs, are all examples of fixed income products. Bonds trade over the counter, the OTC, on the bond market and secondary market. Types of fixed income products. As stated earlier, the most common example of a fixed income security is a government or corporate bond. The most common government securities are those issued by the U.S. government and are generally referred to as Treasury securities. Fixed income securities are offered by non-U.S. governments and corporations as well. Here are the most common types of fixed income products. Treasury bills, called T-bills, are short-term fixed income securities that mature within 1 year and do not pay coupon returns. Investors buy the bill at a price less than its face value, and investors earn what the difference is at maturity. Treasury notes, T-notes. So there's T-bills and T-notes. T-notes come in maturities between 2 and 10 years, pay a fixed interest rate, and are sold in multiples of 100. At the end of maturity, investors are repaid the principal but earn semi-annual interest payments until maturity. T-bonds, which are Treasury bonds. They're similar to the T-note, except it matures in 20 or 30 years. Treasury bonds can be purchased in multiples of 100. Treasury inflation-protected securities, TIPS, protect investors from inflation. The principal amount of a TIPS bonds adjusts with inflation and deflation. So I'm thinking that SVB should have had some TIPS instead of regular bonds, huh? A municipal bond is similar to a treasury since it's government issued, except it's issued and backed by a state, municipality, or county instead of the federal government. And it's used to raise capital to finance local expenditures. Muni bonds can have tax-free benefits to investors as well. Corporate bonds come in various types, and the price and interest rate offered largely depend on the company's financial stability and its creditworthiness. Bonds with higher credit ratings typically pay lower coupon rates. Junk bonds, also called high-yield bonds, are corporate issues that pay a greater coupon due to the higher risk of default. Default is when a company fails to pay back the principal and interest on a bond or debt security. A certificate of deposit, a CD, is a fixed income vehicle offered by financial institutions with maturities of less than 5 years. The rate is higher than a typical savings account, and CDs carry FDIC or National Credit Union Administration protection. Excuse me. Traditional portfolio theory claims that an efficient investment strategy attempting to balance risk and returns should diversify in stocks and bonds. Stocks tend to be riskier with higher potential returns, while fixed income securities are safer with usually lower returns. How to invest in fixed income. Investors looking to add fixed income securities to their portfolios have several options. Today, most brokers offer customers direct access to a range of bond markets, from treasuries to corporate bonds to munis. For those who do not want to select individual bonds, fixed income mutual funds, bond funds, give exposure to various bonds and debt instruments. These funds allow the investor to have an income stream with the professional management of the portfolio. Fixed income ETFs work much like a mutual fund, but may be more accessible and more cost-effective to individual investors. These ETFs may target specific credit ratings, durations, or other factors. ETFs also carry a professional management expense. Fixed income investing is generally a conservative strategy where returns are generated from low-risk securities that pay predictable interest. Since the risk is lower, the interest coupon payments are also usually lower as well. Building a fixed income portfolio may include investing in bonds, bond mutual funds, and certificates of deposits. One such strategy using fixed income products is called the laddering strategy. A laddering strategy offers steady interest income through the investment in a series of short-term bonds. As bonds mature, the portfolio manager reinvests the return principal into new short-term bonds, extending the ladder. This method allows the investor to have access to ready capital and avoid losing out on rising market interest rates. And right now, guys, this is a good idea. Like the tips, things that are interest, they have resilience. My throat is so dry and scratchy. I'll tell you the one thing about a cappuccino, though. It's not very big. I could have had like 6 shots in this little tiny cup with milk. So, for example, a $60,000 investment could be divided into 1-year, 2-year, and 3-year bonds. The investor divides the $60,000 principal into 3 equal portions, investing $20,000 into each of the 3 bonds. When the 1-year bond matures, the $20,000 principal will be rolled into a bond maturing 1 year after the original 3-year holding. When the second bond matures, those funds roll into a bond that extends the latter for another year. In this way, the investor has a steady return of interest income and can take advantage of any higher interest rates. So that way, that is a good idea. You have some 1 years. When they expire, the 2 years are about to expire and become 1 year, so you buy more 3 years. Oh, that's so smart. So, advantages of fixed income. Income generation. Fixed income investments offer investors a steady stream of income over the life of the bond. So you're not just putting your money in, guys. You put your money in and they give you a little bit of money as you're waiting. So if you were to invest $60,000 at 5%, I got to grab out my handy dandy calculator. So 60,000 times 5%, $3,000. So if you invested $60,000, right, and you invested it at a 5% interest rate, that would make you $3,000. So if they paid 5% monthly or 5% yearly, it would be $3,000. So what happens if you only have $1,000? $50. So you get less. But guys, $50 a year on money that you're not using is a good return, actually. So, one second. Sorry, dry throat. Drinking a lot of water. It's the springtime like this when summer's about to come. Everything outside is just clogging up my entire allergy system. I got a whole system of allergies. So, fixed income investments offer investors a steady stream of income over the life of the bond or debt instrument, while simultaneously offering the issuer much needed access to capital or money. Steady income lets investors plan for spending, a reason these are popular products in retirement portfolios. Relatively less volatile. The interest payments from fixed income products can also help investors stabilize the risk return in their investment portfolio, known as the market risk. For investors holding stocks, prices can fluctuate, resulting in large gains or losses. The steady and stable interest payments from fixed income products can partly offset losses from the decline in stock prices. As a result, these safe investments help to diversify the risk of an investment portfolio. Guarantees. Also, fixed income investments in the form of treasury bonds, T-bonds, have the backing of the U.S. government. Corporate bonds, while not insured, are backed by the financial viability of the underlying company. Should a company declare bankruptcy or liquidation, bondholders have a higher claim on company assets than do common shareholders. Moreover, bond investments held at brokerage firms are backed by the Security Investor Protection Corporation, SIPC. Up to $500,000 coverage for cash and securities held by the firm. Fixed income CDs have federal deposit insurance from the FDIC protection, up to $250,000 per individual. So, If you do a bond investment from a corporate bond, then you are covered by SIPC and the FDIC. So fixed rates are great to reduce risk, but once you're locked in, you can't increase the rate. During inflation periods, fixed income securities are less favorable as the rate you've locked into in the past is likely less than the current rate of new return bond issuances. And we have seen this happen to banks recently, guys. The banks invested in bonds, the rates changed, the bonds were worth less, and they had to trade them in, lose money. And then they closed the bank. No good. So, risks associated with fixed income. Although there are many benefits to fixed income products, as with all investments, there are several risks investors should be aware of before purchasing them. Credit and default risk. Excuse me. As mentioned earlier, treasuries and CDs have protection through the government and FDIC. Corporate debt, while less secure, still ranks higher for repayment than do shareholders. So if they go into bankruptcy, bonds get paid before shareholders. When choosing an investment, take care to look at the credit rating of the bond and the underlying company. Bonds with ratings below BBB are of low quality and considered junk bonds. The credit risk linked to a corporation can have varying effects on the valuations of the fixed income instrument leading up to its maturity. If a company is struggling, the prices of its bonds on the secondary market might decline in value. If an investor tries to sell a bond of a struggling company, the bond might sell for less than the face or par value. Also, the bond may become difficult for investors to sell in an open market at a fair price or at all because there's no demand for it. The prices of bonds can increase and decrease over the life of the bond. If the investor holds the bond until its maturity, the price movements are immaterial since the investor will be paid the face value of the bond upon maturity. However, if the bondholder sells the bond before its maturity through a broker or a financial institution, the investor will receive the current market price at the time of the sale. The selling price could result in a gain or a loss on the investment depending on the underlying corporation, the coupon interest rate, and the current market interest rate. So that's what SVB did, guys. They sold the bond before its maturity, and that resulted in a loss on their investment. So we could see how this actually works and how it affects people and why you have to be careful when interest rates are rising. So, interest rate risk. Fixed income investors might face interest rate risk. This happens in an environment where market interest rates are rising and the rate paid by the bond falls behind. In this case, the bond would lose value in the secondary bond market. Also, the investor's capital is tied up in the investment and they cannot put it to work earning higher income without taking an initial loss. For example, an investor purchased a 2-year bond paying 2.5% per year, and interest rates for 2-year bonds jumped to 5%. The investor is locked in at 2.5. For better or worse, investors holding fixed income products receive their fixed rate regardless of where interest rates move in the market. Inflationary risks. Inflationary risk is also a danger to fixed income investors. The pace at which prices rise in the economy is called inflation. If prices rise or inflation increases, it eats into the gains of fixed income securities. For example, if a fixed rate debt secures at a 2% return and inflation rises by 1.5%, the investor loses out, earning only a 0.5% return in real terms. So, the pros and cons. Pros: steady income stream of fixed returns, more stable returns than stocks, a higher claim to the assets in bankruptcy, so that you can get your money back before shareholders. That's what that means. Government and FDIC backing on some of them. Returns are often lower than other investments, which is a con. Credit and default risk exposure. Susceptible to interest rate risk and sensitive to inflationary risks. So a tip: some government bonds like Treasury inflation protected securities, which are called TIPS, are indexed to changes in the inflation rate and protect investors accordingly. Fixed income analysis: what to consider. When deciding which of these financial products to invest in, investors perform fixed income analysis. The techniques below are used to evaluate which investments make best sense for the investor's risk appetite and expected returns. Fixed income analysis often begins with risk. All investments have a relationship between its risk and its return. All else equal, an investment's returns should be higher when the investment is riskier. Therefore, fixed income analysis is not only assesses whether an investor is comfortable with the level of risk they are taking on, but whether the level of risk is appropriate for a fixed income security's return. For fixed income securities, risk is tied to the creditworthiness of the issuing company, length of the fixed income security, and industry in which the company participates in. For example, you'll often find the lowest. That was one big old long run-on sentence. I didn't mean to do that. Sometimes I can't even understand myself. Holy cow. So, for fixed income securities, risk is tied to the creditworthiness of the issuing company, the length of the fixed income security, and industry in which the company participates in. For example, you'll often find the lowest return fixed income securities related to the U.S. government because risk of default is low. U.S. bonds are often seen as safer forms of investment. On the other hand, corporations, especially ones with cash flow problems, might pose greater risk. Some fixed income securities offer periodic payments. This allows investors to recoup funds during the duration of the investment. This also reduces risk, as not all capital needs to be returned at the end of potentially long bond term. Last, different fixed income securities have different features that make them more or less appealing. Some may be callable, where the debtor can repay the full bond prior to maturity. Other allows for the fixed income security to be converted to common stock. It's critical to consider what features are important to you, as each favorable term likely reduces yield. So, example of fixed income. To illustrate, let's say that PepsiCo, which is PEP, that's its ticker, guys. Remember, a ticker is its symbol to research it on the stock market. So, PEP, all you do, search for news, symbols, or companies. You could type PEP in here, and it would pull up Pepsi's summary. You see? Simple. And you can look at charts by clicking into here. See, these are dividends, guys. PepsiCo pays 1.15 on dividends. And things like Pepsi, we have to remember that Coca-Cola is one of Berkshire Hathaway's. And we always talk about Berkshire Hathaway, guys, because Berkshire Hathaway has been around forever and they know what they're doing. They know who to invest in. We read yesterday that Berkshire Hathaway has $88 billion in cash because they can't find people to, they don't have any companies that they want to invest in. So therefore, the market is iffy right now, guys. That is why we're learning it. We're not learning it to shun it. We are learning it to take advantage of it. The only way to use something is to understand how to use it, correct? So we have to learn to understand how to use the market. So whether it is up or down, we know what we're doing, guys. So that is why we're here, if you wondered. So to illustrate, let's say Pepsi-Cola issues fixed rate bonds for a new bottling plant in Argentina. The issued 5% bond is available at face value of $1,000 each and is due to mature in 5 years. The company plans to use proceeds from the new plant to repay the debt. You purchase 10 bonds costing a total of $10,000 and will receive $500 in interest payments each year for 5 years. So you'll receive $500 each year for 5 years. So you'll get $2,500 for investing $10,000. That's a really good repayment, guys. You can make $2,500 in 5 years just from sitting your money into this. You see, into this vehicle. If you set your money into a regular, what does a checking account pay? Let's go to Chase checking account interest. What is it? Oh, Chase checking accounts only offer a 0.1% APY, guys. That means that if you had $10,000, I'm just pulling out my handy dandy little calculator. That's $100. No, 0.1%. So it's 1, 2, 3, 4. $1 a year off of $10,000. That's what you get. God, dog. That's not very good. What about a savings account? Don't put your money in a checking account. What's a savings account get? Saving rates are low. What are they? Why won't they tell me what their savings rates are on a... The national average savings rate for deposit accounts tracked by the FDIC was 0.4%. Okay? So 0.4% of... Why is my caps lock on? Of $10,000. $40. That's right. You'll get $40 if you put $10,000 into what they say is the average rate for deposit accounts is 0.4. So if you put your $10,000 into one of your savings accounts for a year, you'll get on average about $40 a year back. But if you were to put it into a fixed income vehicle that say had a 5% interest or repayment interest, you would get $500 a year. You see that difference, 40 to 500? This is why you cannot save money in a savings account. If you have money in your savings account and you're not going to immediately use it, and by savings account, guys, I don't mean your emergency account. You leave that cash in the emergency account. You need it there. Okay? That is fine for a savings account. If you have your emergency fund in a savings account, I am proud of you. But if you have more than your emergency fund in your savings account, or if you have your children's college in a savings account, I'm not proud of you. Because if you have $10,000 in an account for any other reason than emergency, you're making $40 a year. But if you were to put it in a protective vehicle like a bond, and maybe you aren't comfortable with a corporate bond like Pepsi, if you don't have it in a government bond, maybe like a TIPS that allows for inflation, you are losing lots of money. This is $40. This is $500. You see the difference? A lot of difference, guys. So the company receives the $10,000 and uses the funds to build the overseas plant. Upon maturity in 5 years, the company pays back the principal amount of $10,000 to the investor, who earned a total of $2,500 in interest over the 5 years. That is great, guys. To get $2,500 for allowing them to use your money for 5 years, that is awesome. If you did this 40 times 5 years, you would get $200. Look at that. $2,500, $200. Things in a savings account are not saving you money, guys. They're not making you money. In order to increase your money, no matter if you're rich or poor or in between, you have to make your money work for you. You do not have enough time in the world, in your life. You can take all your life and you do not have enough time to work, to exchange your time for money. You have to learn that the money that you exchange your time for, you have to make that money grow itself. And that means understanding, learning how money works. And that is why we're here. And I understand that some people be like, well, you're just reading articles and you're just looking things up. Guys, if you go and watch every single one of I'll show you them. We'll go to YouTube. This is my YouTube. It's not a very big YouTube. That's okay. We got 1.88K followers and 446 videos. But if you go here, see, look, there's us. Only one person watching, guys. That's okay. If you go to playlists and you look up all my playlists, I got a lot of playlists. I got gamer playlists. If you like to game, come take a break and watch some games. We got scary games. We got funny games. We got kids games. Your kids like to game. Look at these great games. If you bop into here, let me pause it though, make sure it's not playing. You will see that we have videos. Lots of videos, guys. How many videos we got? That's not my video. But if you look, I have all these videos. Nope, those are liked videos. We're in the wrong playlist. Here's the playlist. Flashes, and then I have... There we go. Look, very interesting. Pause that. And here it is, Stock Market Learning. 39 videos. Today will be the 40th. And all the way back down at the beginning, what is stock market? Stocks versus bonds. Stocks for beginners. The stock market. What is financial literacy? We have all different types of videos, guys. And I understand that if you don't want to think that that's how you learn. But reading and understanding the words first. Oh my goodness, my face is like vibrating with numbness, guys, from allergies. I don't know if you suffer from allergies. Bread, do you suffer from allergies? I am having a hard time right now. I have a stuffed up nose and my throat is scratching me out. But anyway, if you save money in a savings account, you can save $200 in 5 years off of $10,000. If you put that $10,000 into a 5% bond, you get $2,500. It makes more sense to put it in here. It makes more sense in your brain to learn this. If you learn this, how can you go back to your bank and deposit $10,000 and just leave it in there? You can't, because once you know it, now you know. Oh, well, you are so lucky, Bread, because my allergies have hit me and they won't leave my throat. I got throat allergies. So we know how much you can make from them, and we know that they are any investing is dangerous, guys. But also, we've seen banks fail. If you go and put your $10,000 into one of these banks, it could fail. Everything is risky when it comes to money. You could buy a brand new car, and the brand new car could have something completely wrong with it. It could be a lemon, and you'll have to go back and get a new car. Everything is risky, guys. Every single thing you do in life comes with risk. You have to understand the risk and manage your risk in order to live a successful life. So if you want to live a successful money life, the first thing you do is understand the simple aspects and definitions of money. If you can't understand these simple definitions, you will never understand the stock market. And that is why we start right here. Right here, just reading a bunch of articles. It's that simple. People think it's not that simple, and that's why they don't do it. So, what are examples? So, fixed income securities are debt instruments that pay a fixed rate of interest. These can include bonds issued by governments or corporations, certificate of deposits called CDs, money market funds, and commercial paper. Preferred stock is sometimes considered fixed income as well, but it's a hybrid security, combining features of debt and equity. What is the difference between fixed income and equity securities? Fixed income securities are debt instruments that pay interest to investors along with the return of the principal amount when the bond matures. Equity, on the other hand, is issued in the form of company stock and represents a residual ownership stake in the firm and not a debt. Equity does not have a maturation date, and while it may pay a dividend, makes no guaranteed payments to investors. In general, equity is a higher risk, higher return security than a company's bonds. So, what this is saying is some bonds will pay you back the amount. Like this one up here, the example, you purchase 10 bonds $10,000, and at the end of the year, they gave you $10,000 back, right? And then the $2,500 you made over the year. Well, some bonds give you equity, and equity is when they don't give you the 5% interest, the $2,500. Instead, in return for buying their bond, they give you equity in the company, which is issued in the form of company stock. So you buy the bond, and in return, you become a stockholder. And this has a higher risk, higher return, because if they give you stock and the company goes down, where does your stock go? Straight down, guys. Your stock goes zoop like this, zoop down, okay? But if they give you the stock and it's a good thing, it might go up. What if they give it to you here? Oops, I clicked in. I didn't mean to click in. Oy vey. I got my whole screen messed up now. So, if you put it here, what if you buy it here and then it goes up here? Well, now you just made $70 per share off of that, right? And if they pay dividends, you're also going to make dividend payments. So sometimes getting equity in a company is a better option, especially if it's a good company. So how does inflation affect fixed income? Guys, this is the biggie. This one right here might not always matter, but right now it matters. Why does it matter? Because we are facing inflation super crazily, okay? And inflation will often have a negative effect on the value of fixed income securities when it leads to higher interest rates. This is because the prices of bonds and other fixed income securities are negatively correlated with interest rate changes. So when the interest rate goes up, the bonds go down, guys. So when your bond price goes down, you lose out money. So you have to be careful. There are bonds that do not affect, and we learned about it up there, called TIPS. So what is a fixed rate versus a variable rate bond? Fixed rate bonds pay the same interest rate over their entire maturity. These can be contrasted with floating or variable rate bonds, which periodically reset the interest rate paid based on prevailing rates in the market. So the bottom line, fixed income refers to debt investments that pay a fixed rate of interest, along with the return of the principal loan upon maturity. These include different types of bonds and certificates of deposit. Fixed income as an asset class is generally less volatile than equity, which is stocks, and is considered to be more conservative. A well-diversified portfolio should have some allocation to fixed income that becomes increasingly larger as one time horizon shortens. So as you get older and your retirement approaches, you don't want things that are iffy and willy-nilly. You want something that when you turn 65, you may need to pull some money out of the market. And so therefore you need non-risky items. And these bonds are perfect things because you can set them to mature when you retire. You might decide 20 years from retirement that you want to buy some 20-year bonds that will finish maturity when you retire, and you can pull that out into useful money. So, bottom line are, understanding bonds are extremely, extremely important. Understanding fixed income types and how to invest in them is probably the most important thing you'll do if you are keeping your money in a savings account. Don't do that, okay? So that is it today for bonds. We're going to check out the news. Let us look at, we're over here on Yahoo Finance. Guys, save this to your little bar. Have a Yahoo Finance on your favorites, okay? So that you could check out things. Every day, check the news out. See where things are moving. Let's see. We don't want to look at Pepsi Cola. I just want to go to Yahoo Finance Home and see what's new. What is new on the homepage? Job openings show surprise increase in April. Wednesday's surprise job openings number is the latest in slew of strong economic data that has economists leaning toward a Federal Reserve interest rate hike in June. They're going to keep rising that interest rate, guys. Texas power outage fuel battery investment rush. More power outages? Stock slide with all eyes on debt ceiling vote. AI is about to significantly change your computer. Secretary Buttigieg I don't know how to say his name. Buttigieg? Buttigieg? Buttigieg. I don't know how to say it. Buttigieg. No, I heard them say his name and it didn't look like that. I don't know. Tesla's Cybertruck could go mainstream. Wall Street suddenly gets more bullish. Advance Auto Parts plunges after slashing guidance. Jamie Dimon says he never discussed Jeffrey Epstein's accounts at JP Morgan. Jess Staley says Dimon did. Ooh. You know he did. He's the CEO. If somebody had that much money in your account, you know them. I don't believe it. I don't believe you, Dimon. I think they should fire him. I don't feel bad for saying that. Bud Light sales decline since they're finally sent their share sliding. So shares in A&B, which is Anheuser-Busch, fell nearly 5% on Tuesday, the worst intraday action on the stock market since the post on April 1st of the Dylan Mulvaney thing. Since the day of the post, shares have fallen roughly 18%. Yeah. Budweiser, Busch, Michelob, Coors Light. The latest data shows little signs that consumers are moving on from Bud Light controversy. That's really sad. So people would rather boycott Bud Light. How many people does Bud Light employees? This is Bud Light Brewer offers danger money to staff. Are you guys serious? Are people harassing the Bud Light workers? Bud Light Brewer offers danger money to staff after transgender influencer issue. No way. Anheuser-Busch, this is ridiculous, guys. Anheuser-Busch should shut down and all the people that drink beer should just stop drinking beer. You guys are ridiculous. If this is how it gets, that people are getting threatened and they have to give them danger money like the military, this is ridiculous and people need to stop. Anheuser-Busch, the maker of Bud Light, has announced that it will be providing financial support to frontline teams and wholesalers who have taken the brunt of a backlash to a company promotion with a transgender influencer. The brewer will also triple its planned U.S. marketing spending on the brand this summer and continue its support of LGBT rights organizations. The announcement comes after a boycott of Bud Light was sparked when transgender influencer Dylan Mulvaney spoke in an Instagram video about a personalized can of Bud Light that the brewer had sent her as a gift. So, this gal, Dylan Mulvaney, she posted this picture, and because of that, people are literally assaulting the workers of Anheuser-Busch who made the who decided to make this can. The workers didn't make the can. Anheuser-Busch made the can, and they made a decision, and people are attacking the people who work there. So you're going to close down a company, and I still don't know. So they get a $500 bonus. Sales representatives, independent distributors have been confronted by angry people on the streets, in bars, and in stores. In response, the brewer's paying a $500 bonus to each of those workers. Michael Dorcas, the company's chief executive, said the situation impacts really the frontline workers more than anybody else. Think about the truck drivers, the delivery people, the sales reps, merchandisers. Those are the people that are the fabric of our business. They are families and neighbors. And you guys are mistreating them over this right here. This picture, this video is creating harm for these people that aren't doing anything but their job. Imagine you work at the DMV and the DMV raised prices. You know, maybe they upped your license to $500. I could see some people going in there and getting super mad that they raised the price to $500. But to take it out on the workers at the DMV would be ignorant, correct? Well, no, not apparently, because these beer drinkers who used to drink Bud Light, guys. Bud Light was the most drank beer, which means the majority of you guys who are complaining drank this beer. And now you're mistreating people because of this. This video right here means that you should treat these people, the delivery people, the sales reps, the merchandisers, because a company made a choice to interact with this person right here. You are going to mistreat their workers. How does that make sense in America? That's some otherworldly, third world, treat people like slaves type of thing. You don't get to mistreat people. If you drink beer, it's killing you anyway. What the hell do you care who they interact with? If you are drinking beer, let me tell you, because I drink beer, guys. I've drank beer. I had a beer the other day. Let me tell you what. Beer is killing you. Yeah. The beer you drink is not healthy for you. It has nothing good for you in it. It is making you and your life worse. It costs money and it doesn't do anything good for you. But that's not why you boycott it. Instead, you boycott it because this gal here had a happy face with some Bud Light. And now not only are you going to boycott the beer and shut down all these workers' monies, but you're going to also mistreat the workers. That is why America will fail, people. Because you treat each other like slaves and like enemies. We are not enemies. This is not our enemy. Bud Light is our enemy, guys. You guys are going to cancel all these people when you should have canceled all these people for the fact, look at this, guys. How many Americans overdrink alcohol? About 39 million adults in the U.S. drink too much. Only 1 in 6 has talked about it with a health professional. Drinking too much includes any alcohol used by pregnant women. About 39 million adults in the U.S. drink too much. Let me get my little handy dandy calculator out and see how many that is. 39. My calculator doesn't do that big of numbers because it's an old calculator. 39 million is how much of our, well, of, in 2020. This is about how many people we have, so. I don't want to do it. Just tell me the answer. It's about 1%. See, 37 would be 1%. So about 1% of the United States drinks too much, guys. So I know there's a lot of you that drink almost too much. So if 1% drink too much, that, my friends, what percentage of Americans are transgender? Not estimates 1.6 million, age of 13 and above. And that's these are studies. So 1.6. What is 0.6 million of 350 million? Why can't my calculator just do it? I'm just 5.31. It's less than 1%, guys. It's less than 1%. So 1% are alcoholics, and less than that amount of people are transgender. So because of people that are less than people who are more, you guys acted this way, it really isn't that big of a deal. There's more of you guys that are addicted to alcohol and misuse alcohol than there are transgender people in the United States. I would say that the bigger issue, because there's more people, there's more guys, it's a bigger percent are addicted to alcohol and misuse alcohol. That's probably the reason why we should, no matter what your take is on transgender, I don't care what your take is. I don't care if you agree. I don't care if you disagree. I don't care if you are transgender. I don't care if you have a transgender mom. I don't care. That's not the point here. The point is that we're going to cancel Bud Light because of less than 1%, 0.1% or 1.5% people are transgender. Or we're going to cancel Bud Light because 1% of our country, 39 million people, are suffering from alcoholism, guys. I think that is why we should shut down Bud. But we should also shut down Coors. You guys didn't decide, oh, we aren't going to drink beer. You decided we're going to drink a different beer. So the problem is not transgender people. The problem is not them working with transgender people. The problem is that we are addicted to alcohol as a country. We have an addiction. And we would rather project onto other people than actually take care of our problem. And our problem is you. The problem is that we have us, not the maker, not Dylan Mulvaney. The problem is Americans on a whole. Americans on a whole have an issue with alcohol. And that is why this is happening. That's all I got to say about that. You got an issue with alcohol, my people. You should probably get right on that. Think about how much money you'd save. "24-year-old stock trader who made $8 million in 2 years." Look at him. Look at all of his charts. Got all the charts. How many monitors do you have? 1, 2, 3 monitors? One of Jack's main indicators is the volume-weighted average price. This shows the average price paid for shares and helps him gauge sentiment. He only uses indicators as a rough guide, but never trades solely on them. Jack Kellogg began trading stocks right out of high school in 2017. 5 years into his craft, he's already been exposed to various types of market conditions, including the stock market crash of 2020. The raging bull rallies of 21, and the bear market of 2022. One thing he's learned through it all is to keep things simple and remain flexible. There's this acronym, KISS. Keep it simple, stupid. I don't think people need super fancy indicators to make money trading. I'm just using basic trend lines, support, resistance, volume, and those are all my indicators. I think if you overcomplicate the indicators, it will actually throw off your trading because you're trading more on the indicators than the actual price action. This attitude has allowed him to become a versatile trader who takes both long and short positions when appropriate, which helped him to continue trading throughout the bear market of 2022. His tax returns, viewed by Insider, showed that he reported over $8 million in gains from day trading in 2020 and 2021. His returns gained momentum in 2020 when he had a total income of $1.6 million. In 2021, that amount grew to a total income of $6.5 million. Kellogg has come a long way since starting off with $7,500, which is what he initially deposited when he started trading. His road to success wasn't a straight line. When he first attempted to trade, he was down a few $100s. This led him to realize that he didn't know what he was doing. So his next moves include switching off real trading and testing his skills through paper trading. Then he signed up for an online course his parents helped pay for. The program, which was created by Timothy Sykes, a trading teacher and former penny stock trader known for claiming to flip his bar mitzvah cash gift into over $1 million in gains, helped him develop the skills and patience he used then to craft his skill. By the time the stock market began to rally hard in 2020, he was ready to ride the upwards wave. In 2022, when the market slowed, he continued to reel in profits by betting on popular stocks like Bed Bath & Beyond and AMC. the latter of which banked him $60,000, according to a screenshot of his E-Trade brokerage account. He also traded a few small cap stocks and saw large wins on single trades like Intelligence Living Application Group, which earned him over $91,000, according to screenshots of his Garden account. The first indicator he uses as a sentiment guide is the volume-weighted average price, the VWAP, which shows the average price paid for shares through all trading adjusted for volume. He uses it on a daily chart as a guide to determine a good buy-in price for the stock he's trading. This keeps him from being a chaser, the term popularly used for those who enter a position too late or after a stock begins to rally. If the goal is to buy low and sell high, you don't want to pay more than what the average buyer paid, he noted. Therefore, Kellogg won't enter a position if the price is above the VWAP line. The opposite is true if he's shorting a stock. If the price is beneath the VWAP, he generally won't short the stock. Oftentimes, he'll use this indicator to also determine when to exit his position, because that point can sometimes indicate where a stock's price will begin to drop off. The same is also true in reverse. He'll sometimes use the VWAP to determine the price point where he'll cover his position. Therefore, if he shorted a stock at $9 and the VWAP is at $7.50, he'll use that price as a point to lock in profits. For example, on January 5th, he took a short position on ticker AMTD at $2.50. VWAP center line was trending at around $2.22, so Kellogg covered his position at $2.25 and made a 10% profit. The next indicator is linear regression, which shows the direction price is trending and when it may change its direction. There are three lines that overlay the candles. The lower and upper lines are the ranges of price movements or volatility, while the center line indicates the average between the two. Price action above the top line signals an overbought stock, and below the line an oversold stock. So, the better a stock is respecting the lines of the channel that it's created, the more predictable I think the stock's going to be, Kellogg said. This gives him a better sense that the stock's price action will tend according to his thesis. The next indicator is volume, which shows the number of sales being traded at any moment in time. Kellogg mainly uses volume as a potential indicator that a stock may reverse. Seeing big volume go through, I know that potentially a lot of people are on the wrong side. So if a big volume spike goes through near the high of the day, it's possible that a lot of people are buying the stock and a lot of people are chasing. Finally, he keeps his eye on the support and resistance lines, the former being where the price tends to hold and the latter where it tends to sell off. The levels change throughout the day. Kellogg tries to find the key levels by looking for a parallel increase in volume in those areas. He also pays attention to how many times and for how long a price level holds to determine how strong that point is. While it's not an exact science, general areas where the price hovers for 30 minutes to an hour are the strongest, he said. Eventually, you'll see a bouncing ball type price action if the stock is going to go lower. You see it bounce from 7 to 8, then bounce again from 7.30 to 7.50, and then bounce from 7.40 to 7.10, then bounce from 7.20, and eventually cracks the support below 7. And then the question is it going to create a resistance level of 7 and continue to head lower? At the end of the day, price action is king, Kellogg noted. Even if you have a thesis about why a stock's price can move in a certain direction, if the price is moving differently, you need to cut losses. I don't ever just base my entire decision off an indicator. So if an indicator isn't agreeing with the trade thesis, then I simply cut my losses. So, and that's good, guys? Risk management. Cut your losses, risk management. So I've never ever blamed any of my losses ever on an indicator because I don't let it get to that point. If the price action is continuing down, then I'll cut my losses. Or if the price action is continuing up, then I'll cover my short positioning. Everyone has access and can view the same data. It's really about where you want to do with the data, he said. Where most traders struggle is with the psychology of trading. You can have the best strategy and indicators, but if you don't have the discipline to stick with it, then you will constantly find yourself in a bad situation. Most people don't put in enough effort to master their emotions, he said. Yeah, how helpful. What did people say? Walter said, buy low, sell high. I am the real guru. Comments are so funny. I knew it. He's just another YouTube guru selling a dream, making YouTube videos. And like all the other, he makes more money on videos from clicks than he ever made trading. He's a YouTube guy. What's his name? I want to see him on YouTube. What was this guy's name? His name's Jack Kellogg. Let's look him up. Jack Kellogg. It's a good cereal treat. Jack Kellogg. Jack Kellogg. Here he is. He's got 12.5K subscribers. He's a multimillionaire day trader and a mentor. Look at him. Jackaroo. I call my cousin Desiree. How to overcome anything. Look at him. And these guys lied. No way. No way did that guy say that. I have half a mind to go back over and tell that guy he's a liar. How many videos does this guy have? 23 videos? Are you serious? This dude's highest video, he doesn't even have 1 million video. He has no videos with 1 million views. He didn't make his money off of YouTube. He has 23 videos. This guy's a liar. We're going to go down and tell him. Can we comment? I knew it. No, downvote you. Downvote you. I can't. I got to sign in. I don't like that guy. Why do you do that? Why did he say that? That was a lie. Mark, you're a liar. Guess the future. If you believe this story, I've got a river to sell real cheap. Mark's a hater. I have half a mind to sign in just to make an account, just to tell these. Man, these people are, they're really hateful, ain't they? Having traded through the late 90s and early 2000s, it was easy to make money. After the dot-com bubble and then the '08 collapse, not so much. My large firm dwindled down to nothing, as did several others in the small investor day trading market. I made some money and bounced, found a real job, and never looked back. These days, you're trading against computers, algorithms, and people with much more capital behind them. So his idea was to get a job and trade his time for money. That is not investing, my friend. That is not. We are trading against computers, algorithms, and people with much more capital behind them. Do you want to know what you're doing at a real job? You guys want to know what a real job is? You're competing against computers, algorithms, and real people with way more skills than you. I thought we learned our lesson. Oh, he said what size clown? Jimbo size. These guys. He said this guy had a YouTube channel. These guys don't know what they're talking about. What's the tax bill on $8 million? In 2021. Was a federal tax on $8 million. If you make $8 million a year living in the region of California, you'll be taxed $371,000. So half. What's wrong with giving half, guys? So even in California, probably one of the highest tax places, it's about half. So they're making fun of this dude who made $6 million in 1 year, and he's going to get half of it. $3 million. I'm okay with that, guys. I don't know what country you're from, but when you make $3 million in a year, I think it's okay. Look at this. This guy has emotional intelligence with Uncle Larry. And teach you emotional intelligence. Those dudes need to come watch his channel. Maybe that's why they got mad. He got a Kellogg shirt on because his last name's Kellogg's. This guy surprised his parents with $100,000 cash on his 23rd birthday. Wah. Well done, dude. Let those people hate on you. I wonder if he's got... I'm going to subscribe. We're going to subscribe to Jack Kellogg. Has he got a community channel we can write on? He doesn't have much. He doesn't have much at all. That's too bad. So, these guys are really making fun of him. And anyway, they mentioned BBY and AMC, which were, you guys, those are the stonks that they were talking about on Reddit and stuff. But who that were in the game didn't take advantage of AMC and BBY? Nice job, Jack. I agree. This guy said, I make money the good old-fashioned way. Robbed a bank. Now with soft on crime DAs, I get more of my hard-earned money. I don't know. You robbed a bank. That's not funny. Well done. Well done. People are just haters, I think. That's okay. Now we're subscribed to Jack Kellogg. How long does $1 million last after 60? Not very long if you're sick, guys. Not very long if you have to go to the hospital. You want at least a 15% dividend yield? What are these two dividend stocks he suggests? I like dividend stocks. Finance Trust. And what else? I wonder if they're in the comments calling this guy a bad names. They're pushing a commercial real estate dividend stock. Commercial real estate is a disaster right now with many major problems. As many articles have described, they've got to be kidding recommending that. Real talk, though. We just saw an article yesterday about commercial real estate. Watch. What? I don't know. I don't know what's happening. Commercial real estate. We don't want it for sale. I don't know. What do we put? What we'll look at is real estate. What do they have on real estate on here? Vehicles worth waiting for. Start your real estate empire small. I don't know, man. I saw that article yesterday about real estate, corporate real estate. It said corporate real estate's going wild right now because nobody wants corporate real estate. So how do you sell corporate real estate when it's millions of dollars and nobody wants it? How do you sell something for $8 million when nobody wants it? Nope. Nada on it because they don't want to tell you nada about it. Yahoo Finance Home. The case for buying Bud stock. Warren Buffett and Goldman Sachs has one thing in common. They both like these three. We like to hear what people like. Look at him. Occidental Petroleum. So, Houston, Texas-based company engages in exploration, production, and marketing of oil and gas. Seems like something you should be in. Oxy. Well, let's check out Oxy. Where's Oxy? Nope. Portfolio. Trade. Type it in. OXY. Oxy. Yep. Occidental Petroleum Company. And where are they on a 5-year? So they took a big hit in 2020, but everybody did, guys. And now they're back up. 57. Okay, let's buy one. This is just paper money. Guys, we're going to buy 10. I like to have 10. Preview the order. Submit the order. Okay, so now we bought Oxy. Let's look at it. Okay, where is it? So if you go into Investopedia Simulator, guys, that's where we could practice and buy things. You can look at everything on, you can look at all of their financials. Yeah, it's all there. You could do all of their, where are their, there's their buying power. That's my buying power. Where is theirs? There's their market cap, but where's all their other stuff? They used to have other stuff. Well, research. There we go. Go to research and then type it in. My bad. Okay, so just showing you this really quick before we go. You can look at all the information here, guys. You could go in to Investopedia Simulator and just look up information if you want. It has all the indicators right here, all of the information. And if you scroll down, it has a company profile, all the fundamental data that we would need to run any of the indicators, guys. If we wanted to figure out the any of them, like if here's the indicators right here. Say you wanted to do the any of the running averages. Any of them. You could figure them out. Well, you could click them and put them here. So we could do 24-hour volume is right there now. See, this is the volume. And it also shows here. It's the extra volume. So you can add those or you can figure them out on your own with this information. Right? Right. And that is that. You can also learn. Guys, there's so much learning in here, like when to sell a stock, investing versus trading, short selling, the basic of order types. So you can learn. We've went over this before, order types. Very, very, very helpful information in here. So check that out. Get yourself an account at Investopedia right here. This is my account. Squealer D. There's games. Where are we? We got it. These are people on here that are making all the money. Look at all this money. The Golden Unicorns, number 2. Chico, Fleet Feet Capital. Rise of the Lurkers. VB Stonks. Maturetti. Ghost of Kiev. MFO. Barefoot Economist. Den of Thieves. ThinkNet. Look at all of them. Pretty cool. So you guys can compete too. We can get on there. You can try to get number 1. Your rank will update starting tomorrow. I have no rank, but I'm going to get a rank. Okay. So you join the game. Beginners. You can join. See this? Investopedia 2020, no end. All of these, Warren Buffett, $1 Million Challenge. These are different games. And you can play them and try to win. So anyway, guys, that's it for today. I hope you guys had a great time learning. Like I said, if you missed any of the other ones, go into the portfolio, or I guess it's called a playlist, not a portfolio. The playlist called Stock Market Learning on my YouTube, and you'll find all of the previous videos. And that is it. If you're interested in gaming, we are gaming live Monday through Friday, different times. Just check us out. We have Bread who games with the younger generation. She does a lot of fun games. And then I also stream live different games. So that could be interesting to you if you like to game. Anyway, I will be back tomorrow, same time, same place, with a new learning article for you guys. We will talk about new money things tomorrow. Be there or be squared. Have a great day, neighbors, and